In the fast-moving realm of modern finance, few figures have captured the imagination of investors, critics, and futurists, quite like Cathie Wood, the founder of ARK Invest, whose strategy built around the bold thesis of disruptive innovation has transformed her from a relatively unknown portfolio manager into one of the most influential and polarizing voices on Wall Street. And to understand how her approach reshaped the landscape of thematic investing, we must journey into the intellectual architecture that underlies ARK's philosophy, a framework rooted in the belief that exponential technologies evolve not in linear steps, but in sudden leaps that reconfigure industries, rewrite cost structures, and create seismic opportunities for those willing to look beyond conventional valuation models and into the deeper mechanics of technological S-curves. Cathie Wood's rise did not begin with the headlines of ARK's extraordinary performance during the 2020 market surge, but with decades of study in macroeconomics, innovation cycles, and the intersection of technology and capital, a background that equipped her with the conviction that the most transformative companies are often misunderstood, underappreciated, or dismissed outright by traditional analysts whose models struggle to capture the compounding forces of innovation, network effects, and learning curves that drive long-term value creation. When she founded ARK Invest in 2014, the firm was built around a radically transparent and research-driven structure in which analysts served not as sector specialists, but as cross-disciplinary explorers of emerging technologies, artificial intelligence, robotics, genomic sequencing, battery storage, fintech, space exploration, each examined through open research, collaborative debate, and a willingness to share insights publicly rather than treat them as proprietary secrets, a decision that shocked the industry, but reflected Wood's belief that innovation thrives in ecosystems where ideas circulate freely. ARK's strategy diverged sharply from traditional portfolio construction by concentrating capital in a relatively small number of high-conviction positions, often in companies that were volatile, unprofitable, and aggressively reinvesting in future growth. Firms like Tesla, Roku, CRISPR Therapeutics, Coinbase, Square Block, and UiPath. Companies dismissed by many institutional investors because their paths to profitability did not fit neatly into discounted cash flow models, yet Wood believed these companies sat at the center of multi-trillion-dollar revolutions, driven by declining cost curves and technological convergence. Central to ARK's methodology is the concept of Wright's law, which predicts that for every cumulative doubling of production, costs fall by a constant percentage, allowing early-stage technologies, electric vehicles, DNA sequencing, reusable rockets, AI training hardware to become cheaper, more scalable, and more widely adopted over time. A dynamic that Wood argues traditional models underestimate because they fail to account for exponential progress. By embedding Wright's law into her valuation frameworks, Wood positioned ARK to identify companies poised to dominate the inflection points of technological adoption, and this approach yielded staggering gains during the pandemic era when digital acceleration, monetary expansion, and societal shifts pushed ARK's flagship fund, ARKK, to historic highs, turning Cathie Wood into a cult figure celebrated as the Queen of Innovation as flows poured into her funds at unprecedented rates. Yet the same concentration and high beta exposure that fueled ARK's ascent also exposed it to harsh reversals when interest rates rose, liquidity tightened, and the market rotated toward value and profitability, leading critics to argue that Wood's models were overly optimistic, insufficiently risk-adjusted, and too dependent on narratives of technological inevitability, accusations that intensified as ARKK suffered steep drawdowns that tested the conviction of investors who once praised her foresight. But to understand ARK purely through the lens of volatility is to misunderstand its core purpose. For Wood's thesis is not built around quarterly earnings or tactical rotations, but around 5 to 10-year horizons in which technological convergence, AI-enhancing robotics, genomics, intertwined with machine learning, energy storage, enabling autonomous systems, creates new economic foundations that reward long-term patience far more than short-term precision. In this context, ARK's open research ecosystem becomes a strategic advantage, allowing its analysts to identify second-order effects and emerging interdependencies before they become obvious to the broader market. And it is this early recognition that positioned ARK to champion companies like Tesla long before they gained mainstream acceptance, driven by Wood's conviction that autonomous ride-hailing, battery cost declines, and AI-driven fleet learning would ultimately reshape global transportation in ways skeptics failed to imagine. As ARK expanded, it introduced specialized funds, ARKQ for robotics and autonomous tech, ARKG for genomics, ARKF for fintech, ARKW for next-generation internet, and ARKX for space innovation, each designed to capture a slice of the innovation landscape, yet all interconnected through ARK's overarching thesis that disruptive technologies reinforce one another, creating compounding growth that accelerates their collective adoption across the global economy. This thematic integration is perhaps most visible in genomic sequencing, where collapsing costs enable personalized medicine, CRISPR-based gene editing, and AI-driven drug discovery. Sectors ARK believes will unlock value comparable to the earliest days of the internet, despite the current skepticism and regulatory hurdles. And Wood's insistence on backing visionary leaders in these fields reflects her belief that innovation is not merely a product of technology, but of people who are willing to challenge orthodoxy and pursue breakthroughs often dismissed as improbable. ARK's strategy also extends to the macroeconomic sphere, where Wood frequently clashes with traditional economists, arguing that technological deflation, not inflation, will define the coming decades as automation reduces labor costs, AI multiplies productivity, and competition forces prices downward across entire industries, creating an environment where companies that fail to innovate become structurally disadvantaged, while those positioned at the forefront of disruption capture enormous market share. As we trace the evolution of ARK Invest from a fringe idea to a central player in the discourse on technological futurism, the deeper contours of Wood's approach reveal themselves. A belief that the world is transitioning through an unprecedented wave of creative destruction, that exponential technologies follow predictable cost decline patterns, and that the market systematically misprices long-term innovation because of cognitive biases, institutional constraints, and the tendency to extrapolate the past rather than imagine the future. And this realization becomes even more compelling as we explore how ARK evaluates management teams, constructs price target scenarios, and integrates long-term optionality into its investment frameworks. Mechanisms that illuminate the next layer of how disruptive innovation shapes not only portfolios, but the trajectory of entire industries, especially as we move toward a future where AI, robotics, energy storage, and genomics collide to form the backbone of a new economic architecture that will redefine industries, labor markets, and global competitiveness in ways far more profound than most traditional models are prepared to acknowledge. And as this convergence accelerates, ARK's strategy becomes not merely an investment thesis, but a framework for understanding how technological diffusion reshapes the rhythms of societal progress, offering a lens through which investors can interpret the cascading effects of exponential change as it transforms everything from transportation and healthcare to manufacturing and finance. In this unfolding landscape, Wood positions ARK not as a passive observer, but as an active participant in the discovery of companies that stand at the epicenter of these seismic shifts. Companies capable of scaling at speeds that defy legacy expectations because their breakthroughs compound upon one another, unlocking new efficiencies and rendering traditional cost structures obsolete. Consider, for example, the fusion of AI with robotics, a pairing that allows robots not only to mimic repetitive tasks, but to learn, adapt, and make autonomous decisions. A transformation that threatens to upend global supply chains, while simultaneously opening new frontiers in precision agriculture, automated logistics, and decentralized manufacturing. And it is within this intersection that ARK identifies firms poised to redefine productivity curves across the world. Similarly, the integration of genomics and machine learning creates a feedback loop in which biological data becomes training fuel for increasingly accurate predictive models, enabling scientists to identify therapeutic targets, optimize gene edits, and accelerate drug development at speeds inconceivable just a decade ago. a revolution ARK believes will produce medical breakthroughs capable of eliminating diseases once considered permanent features of the human condition. This belief in convergence extends to energy storage, where battery improvements not only enhance electric vehicles, but also enable AI-powered grids, decentralized energy markets, and autonomous systems that rely on durable, low-cost power sources to function at scale, creating a technological ecosystem in which each innovation amplifies the others. Yet, despite this compelling vision, ARK faces a persistent challenge: the market's deep-seated attachment to linear thinking, where investors extrapolate from present conditions rather than anticipate how cost declines, adoption curves, and network effects can flip entire industries seemingly overnight. And it is within this tension that Wood's strategy often appears contrarian, for she is willing to embrace volatility as the price of being early, believing that the market eventually rewards those who understand the deeper trajectory of innovation rather than those who chase short-term consensus. This conviction, however, requires resilience, both for ARK and for its investors, as disruptive innovation rarely moves in straight lines, but instead through cycles of hype, doubt, breakthrough, and consolidation. Cycles that test emotional discipline and force investors to distinguish between temporary noise and long-term structural change. Cathie Wood approaches these cycles with a combination of faith in her research, flexibility to adapt when new data emerges, and an almost missionary determination to educate the market on how to recognize the signals of exponential transformation long before they become conventional wisdom, traits that have earned her both devoted supporters and vocal detractors. But the true test of ARK's strategy lies not in its short-term performance, but in its ability to identify the companies and technologies that will dominate the next decades. And here, Wood's frameworks open research, cross-disciplinary analysis, cost decline modeling, and long-horizon valuation provide a blueprint for navigating a world where innovation is no longer incremental, but explosive. As we arrive at the culmination of this exploration, a final insight crystallizes. ARK's disruptive innovation strategy is not merely about betting on futuristic companies, but about understanding how technological revolutions reshape economies at their foundations, creating new winners, exposing the limits of legacy thinking, and rewarding those with the courage to imagine futures that others dismiss as implausible. The lesson that emerges from Cathie Wood's approach is that investing in disruption is as much an act of imagination as it is of analysis, requiring a willingness to see beyond present constraints and into the transformative potential of technologies still in their adolescence. And when viewed through this lens, ARK Invest becomes not just a thematic fund manager, but a guide through the turbulent, exhilarating landscape of exponential change, reminding us that the future belongs to those who recognize its arrival before the rest of the world is ready to believe it.